What is going on, you guys? So in this video, I'm going to show you guys how to day trade options. That's right, day trade options. It's something very simple, very easy, very basic. It's something I learned whenever I first, after I knew the basics about, stock market or day trading, whatever. I wanted a way to be able to short stocks and stuff like that, and that's how I discovered options trading. Really, I just wanted a way to short stocks, and I didn't have a big account or anything like that. And of course, being under PDT and then a lot of brokers, you can't really short on a lot of brokers. That's why I came over here that's how I discovered options trading, pretty much. So let's get to it. Let's get started. Hopefully I save you some money, as I see people out there charging $500 on how to day trade options. They're just charging you anything they can get their hands on, claiming they're very I'm helping the community, whatever. But you know how it really is. So let's get started right away. So I'm going to be placing all the trades. This is going to be on the SPY, just an example. Again, it can be anything really, Facebook, whatever. But like I said, this is going to be on the SPY, just because it's something I like to trade a lot. I pretty much trade it every day. So let's get started. So first off, you're going to come over here to trade tab. I got it linked already. If you don't know how to link, just click this, click red or whatever, and then come in your charts, click red. So I got it linked in. Go to your trade tab. First thing you're going to see is all this. All right, so these are all contracts down here. Couple of little things you need to know. So the number here, the 21, 23, these numbers here, the days, that's whenever the contract or the option expires. So like this one expires on the 21st. Today, by the way, it's not November 20th, but in real time it's December 2nd, 2019. But on this Thinkorswim thing, I got it at 2018 November 20th. I don't know why, it just randomly came up like that, so that's how I decided to do it. So this expires on the 21st, so this would be expiring tomorrow, and so on and so forth. That's what these numbers are for. And then November 18 or 18 is just a year. And the number one here, all these numbers here, that just tells you how many days. So this one expires tomorrow, this one expires in 3 days, so on and so forth. So if you were looking to swing trading options, something like that, something you can look forward to in the future, you can just come down here and say by December 19th, in 29 days, you think the SPY is going to be under, like at 260 or something like that. You can come down here and buy one of these here, and that's how you would be swinging it. But there's a little bit more to it than that, because options have something that's called intrinsic value, and pretty much every day they're going to lose money. And if you're not on the right side of the trade, you're going to be losing a lot of money. So you got to learn how to do that. Really what I like to do is sell puts. That's what I like to do. And as soon as somebody hears that, they're going to charge you another $500 on showing you, how to sell puts, the magic formula, get it now. But that's something I can show you guys. If you guys want a video, I'll make a video on that. It's something that, if you know what you're doing, you're pretty much guaranteed to make money. But like I said, this is day trading options basics. Super simple, very easy. So let's get started now. Enough talking. So if you're going to be day trading options, just do what I do is come over here, click filter, click days to expiry, click 5, and that's it. So what that does is it's going to show me contracts that expire in 5 days or less. So the SPY here, it has 3 days that expire. They expire on Monday, Wednesday, and Friday. So they have 3 contracts per week. That's why I like the SPY a lot, because on Mondays it'll be cheap, on Wednesdays they're pretty much cheap all the time. So of course up here, just depending on how your platform is, you can have this right here. This is what I like to look at. Yeah, your trade grid, you can load up a chart here. You can look at the level 2 here if you're interested in that. Pretty much anything you want. Thinkorswim has it. So I just like to look at this. I like to look at the bid and the ask right here. I like to see the sizes, volumes, and then this is really important, the open, high, and low. That's very important stuff. And of course the price here. So enough of that. Let's go over here. You're going to click on this one if you want to day trade. Now, whenever you day trade an option, or what you're going to do is obviously click the first one. Or it doesn't matter. You can click this one or this one. Doesn't really matter. But on the day of expiry, say on day 0, so tomorrow, if I want to be day trading options, I recommend you go to the next one over. So like tomorrow I would be trading this one down here. They're gonna be a little bit more expensive, not too much, and these are gonna be really cheap. But the thing about it is, if you're not on the right trade or on the right side of the trade, you're gonna lose money really quickly. So I recommend, as a beginner, coming down here and trading the next one on the day of expiry. So when the top one expires tomorrow, I recommend you come and trade this one instead of the first one. Like I said, just because if you're on the wrong side of the trade, you'll lose a lot of money real quick. All right, but enough of that. Let's get to it. So you click on that. You got what's called your strike prices here. Now I like to go over here and click. Usually I'll do 8. We'll do 10 right now. You can click all, and it's going to show you all the strike prices. All right, so pretty much anything you see, as you can see, these are really cheap up here. These are really cheap down here, but you're not going to be trading those because those are pretty much worthless. You're going to lose a lot of money. I remember the first time I traded options, like maybe 3 years ago. The first time I did it, I came up here and I saw these were really cheap, and I went in and bought like 50 of these right here, and I lost money because I didn't know what I was doing. These never moved up or anything like that, and I pretty much lost money. So you're gonna come up here, put 8, and this is what we're gonna be focused on right here. So on every platform, it's pretty much the same thing. It might look a little different, but it's the same thing. So on this side, you have your calls. On the left side, on the right side, you're gonna have your puts. So pretty much calls equals long. So if you want to go long, you buy a call. If you want to go short, you buy a put. That's how it is. Like later on, I told you guys, I like to sell puts. If you think the stock is going to go up, you're going to sell puts. But that's a different story. Okay, so these that are highlighted, like light blue or gray or whatever, these are what's called in the money. Okay, in the money. So on the put side, if the price right now is 265.05, if it goes below 265, or let's say it goes to 26, as soon as it drops to 264.99, this is gonna be at the money, okay, or in the money. When it's right on it, right like this, it's pretty much considered at the money, and then when it goes lower, it's considered in the money. Same thing. You'll hear at the money, in the money, same thing. So 265. As soon as it goes below 265, the stock, or the S&P 500, whatever. As soon as it goes below 265, this will now be in the money. And the further in the money you are, the more money you're going to be making. All right. So you can either buy this one, or this one, or this one. You can buy pretty much any one you want. It doesn't really matter. But what most people do is you buy the next one over. And if you think that's too expensive, then you can buy the next one over. Now the SPY usually is pretty cheap. I don't know what was going on down here at this time, but usually they're going to be like 60 cents, something like that. And for the call side, it's the same thing. Okay, if these are in the money, this is out of the money. So as soon as the price, say the stock goes to 266, say the stock is going up. When it goes above 266, this will come down and be highlighted blue or gray or whatever, and this will be in the money. All right, that's pretty much how it is. So then you can come over here and click on different things. So this is where you get confused, guys. You hear all this, all these where is it at? You hear all this stuff right here, like Gamma, Data, Rhino, or whatever, Vega. All this stuff right here, you're not gonna need. Pretty much the only thing I like to look at is this right here: probability in the money, out of the money. I don't really look at that, but I just like to have this one, probability out of the money. So OTM means out of the money. ITM means in the money. So what's the probability that on the day of expiry, so tomorrow when the day's over, that the market is going to be at 265 or under 265 is 100%. So if you like to gamble, go to casino law, you know, if the odds are in your favor, that's a good deal. All right, that's a good deal. You're not going to be gambling if you have a 2% chance of winning and 98% chance of losing. You're not going to gamble because it's not, the odds aren't in your favor. So same thing here. Obviously they're not going to be 100%. Right now is just you know, this is so far off. I think it just doesn't really know right now. But again, it doesn't really matter, especially if you're going to day trade options. It doesn't really matter. And up here, the volume doesn't matter at all. It doesn't really matter. All you need to pay attention to is right here. All right, so now how do you place a trade? Okay, well, now that I know what calls are and puts are, how do I place a trade? All right, these are the strike prices, obviously. And pretty much right now, if you figured it out, you pretty much already know how to trade options just by what I told you. Okay, but let me show you guys. Okay, so we're gonna go to the chart. The SPY is at 265.05. All right. You think it's gonna go lower. You don't know how much, but you think it's gonna go lower for a while. You think it's gonna be, you know, it's gonna have a good. You think it's gonna go lower than 265 or whatever. You're gonna come over here, click your next one over to 265. You're gonna buy this one, or like I said, you can buy any one you want. It doesn't really matter. But what I usually do is just buy this one. The most I'll do is probably this one, the next one over. But pretty much I'll just do this one that's not in the money yet. It's out of the money. I'll buy this one. So you're gonna click buy. If you're on the, you know, whenever you want to buy an option or whatever, you just go over here and click buy. So you'll see here it says sell, buy. So you go to the ask, click buy. This is going to come up right here. Don't be scared of this. It's something very simple, very easy to use. So on the side, you're going to make sure it says buy, not sell. Okay, you're going to click buy. And automatically it's going to have, mine has 10, yours might be different. Doesn't really matter. What I like about Thinkorswim is you can do, say you only want to risk $500, you can click money, put $500, and it's gonna buy the amount of all the contracts you can for $500. That's what I like about Thinkorswim. So you're gonna do 10. Let's just do 10 for easy numbers. And you're gonna, right here you have your limit order, market order, stop limit, whatever. It doesn't matter. Obviously your day, good till cancel, whatever. Exchange. Just leave all this how it is. I like to do limit. So it's at 208. We got a spread here about, you know, 7 cents. So you're gonna do 208. You're gonna come over here and just click 2. So 210 or whatever. This just, what this is, the limit price. What this does is it just guarantees that you're gonna get in the trade. All right. So 210. I have it at 210. What that means is that you're not gonna pay more than 210 for this contract. Okay, if you have it right at 208 and it's moving pretty fast or whatever, going towards your way, you can, you know, click, you can just have it like this and you probably won't get in the trade just because it's going to pass you real quick. So what I like to do is keep it at 210 or, you know, 2 to 3 cents over what it is right now. It's not good. It doesn't mean it's going to fill you at 210. It just means the most it's going to fill you at is at 210. The most you're going to pay is 210. So it's going to try to fill you at the best place possible, but the most you're going to be paying for is 210. So 210 times 100 or 10 contracts. Now every contract is 100 shares. So one contract is 100 shares, 2 is 200, 3 300, so on and so forth. Right here 10 is 1,000 shares. That's what I have control of 1,000 shares here. So you're gonna come over here, click confirm, and it's asking me this. Okay, order to buy 10 contracts, limit to 10, and it's gonna be okay. The cost of this trade is gonna be $2,100 because I'm you know, it's costing me $2.10 per contract. Okay, if you just do one, or let's just say you do 5, then it's gonna be, the total cost is gonna be $1,050. All right, so make it easy on you guys. If you do one, the cost of this trade is gonna be $210. All right, that's how you do it. So let's do 10. Click on it, confirm it, just click send, and now you have an order to buy 10 contracts here. Okay, now we're gonna click we're gonna play along the day here. Now obviously on demand, it's not gonna fill you, you know, exactly like it would in real time. In real time it would have filled me already. Like I said, this is on demand, so hopefully it gets me filled in. Let me fast forward this, see what happens. So I'm betting right now that the price is gonna go to 265. Okay, now here's another thing I want to tell you guys. So when you buy this contract here, it does not mean that you're not gonna make money until the stock goes below 265. That's not what it means. Okay. If the stock starts moving downwards, you know, you're gonna start making money right away, as long as you have a pretty good strike price. So right here, you're gonna start making money as soon as it starts, you know, the stock starts going down. But if you buy one way out here, you're gonna be making money. But the closer it is to being in the money, the more you're gonna make. Okay, now if it starts going up, then you're gonna start losing money. Not crazy amounts, but you know, the more it goes up, the more you're gonna be losing money. But like right now, I'm betting that the stock is gonna go lower. Okay, those 265, just because it's the next one over. It doesn't really mean I think it's gonna go to 265. But in this case, you know, it's so low, it's pretty much, you know, like 90% chance it's gonna go to 265. So like I said, we're gonna play this day on. Hopefully I get filled here. Like I said, in real life I would have been filled already, but okay, I got filled at 205. Okay, so pretty much a good fill. And now watch this. Okay, so as soon as I start making money, so as if you see right now, I'm down $5. All right, so when it's in parentheses, that means you're down money. Okay, so let's fast forward this real quick, and let's just pretend it's during the day or whatever. And now obviously I didn't choose, you know, I don't really know what's gonna happen. You know, I just chose this. I just went randomly. It's not like I think it's really gonna go down. I don't know, but let's just see what happens. Okay, so 265 is right here. So once it goes below this red line here, 265 is going to be in the money. So right now, if you're thinking about going long, you would buy the 267 just because it's the next one over, 266. I mean, and then you just buy this, and you know, if the stock started moving upwards, right now you would be making money. How much? It just depends on how far it goes up. When it passes 266, it would be in the money, and then the higher and higher it goes, you know, you're gonna be more in the money, make more money. All right, so obviously it's going up. The more up it goes, I'm gonna be losing money. You see, I'm now down $315 because I have 10 contracts. That's why you want to be careful on your sizing, guys. Don't be going. You can make a lot of money on options. That's what they tell you guys. You can make a lot of money on options, which is true. But if you're on the wrong side of the trade, you can also lose a lot of money. All right, you can lose a lot of money as well. So you pretty much have to know what you're doing. Like I said, I like to sell puts. That if you know what you're doing, that's pretty much not a guarantee, but it's like It's pretty much like having a paycheck, all right? So what you would do is you come over here to sell it. I'm not going to do this right now because I'm in the trade, but you would sell it and then you would get paid. So say it's a 10 contract, you would get paid, 1,078. And then if it stays out of the money, then you would pretty much bank all that. But that's a different day, a different story. Okay, look, it's starting to come down. Looks like it's going to come down a little bit. Let's see what happens. Let me fast forward this a couple minutes. I don't want to waste too much of you guys' time. This is pretty much a long video already. All right, so it's coming down. I just decided to click to buy a put because the market was looking weak. If you see this drop off here, just give it a little bit so it can fluctuate with so price can catch up. So right here, you would be losing a lot of money if it was up here. All right, so that's why you want to be careful and know what you're really. Okay, so look where it's at right now. It's at 264.71. You come over here, you're gonna be up 35 bucks. As you see now, your position here, it is now in the money. Okay, it's now in the money. The further it goes in the money, the more money you're gonna be making. All right, so you're probably thinking only 35 bucks. Yeah, okay, so because if you remember, I got filled at 205. It's now at 207. The ask is at 210. Let's keep going. Let's keep this going. See how far. I think it's gonna maybe 264. I think we can do. Just do 10 minutes ahead of time again. This is why I like to trade on 30 minutes, guys, just because it keeps you out of all the unnecessary trades you get into. It makes you be patient and not get into trade you don't need to be getting into. Let's see if we can break this low real quick. If we can't, then I think it might bounce because we do have a gap to fill. I don't know if it's gonna be filled today, but okay. So right now we're at 264.55. Let's go check the price. Okay, now we're up 365 bucks. Okay, as you can see our position here, we bought it at 205 and now it's at 240. Okay, so that's where this $365 comes from. You have 10 contracts and the money. So that's pretty much how you do it. And the further on it goes down, if it were to go further on down, then you just be making more money. All right, what I recommend you do, come over here. If you don't want to, if you're those type of people that always says, oh man, every time I get out of the trade, something crazy happens. It goes more, it does what I wanted it to do. And you come over here and you can sell a couple. You don't have to sell them all. You just sell a couple. So to sell them, what you're going to do is you're going to click over here on the sell tab. And you're going to sell, if you want to sell them all, you can sell them all. Just click 10. So this is now going to be red. It's going to be on, before it was on buy. If you do buy again, you're going to be buying more. So to sell, it's going to be on sell. And then let's just say you want to sell, I don't know, let's just say you want to sell 8 of them. All right, 240, let's just do 239. Okay, now I put price limit to 38. So now what this is it's not gonna sell right away, or I don't know how it's gonna do it on demand, but realistically, if the price went lower, it would sell them. Okay, so I don't want to be selling them if they're going higher. So you can do that, or it doesn't really matter. That's what I do right here. Click confirm send. Okay, so I just sold 8 of them. I actually think I did it wrong. Okay, yeah, that's how you do it. But realistically, I would just have it. If you want to sell them quick, then you would go down. All right, but if not, if you want to catch a little bit more, you go up. All right, but so I sold 8 of them. Now you can see I only have 2 left. So I pretty much already logged in, pretty much 361. Now I have 73 bucks left. Let's just see what goes on, what happens. Again, whenever you're doing any type of trading, don't be looking at your P&L. Don't be looking at this. Now, obviously, you won't be looking at this. Don't be looking at your P&L, though. That's just going to confuse you and put emotion in your trading. You don't want that. So I like to do this. I like to look at the bid and ask right here. And volume, I don't really care too much about. It's already, it's a good amount of volume. Just look at the size. If you start seeing, this is kind of a level 2 lesson, but I'll touch up on it a little bit. I like to look at this a lot. Okay, now what this helps me is, if you see a lot of size on the bid and not a lot on the ask, and you start and the price starts going up, and you keep seeing a lot of size on the bid, that means the price is going up. Let's look at the charts. Fast forward this a little bit. Let's see if we can break the low 264. Looks like we might. See if we can break that low, 207, 206. Okay, we got it. We got a new low. Let's go look at our trade. So now we're up, on 2 contracts, we're up 120 bucks. So it doesn't take a lot of contracts, guys, that make a lot of money, as you see. Okay, now you think, you know what, this is going to be it. If you look at our position now we're really in the money. Okay, look how deep we are in the money. Okay, remember when we first bought it, our position was just like this. All right, we bought it, it was black, and then it kind of turned blue, and it just stayed there. But look at it now, it's really in the money. It's deep in the money. So the deeper it gets, the more it is down here, the more money you're gonna be making. Okay, so that's how it is right there. Click play. Now again, this is just as an example. Let's just say, okay, you know what, I'm pretty much, I'm good. I think that's the most it's gonna go, or whatever. You're gonna come over here to trade. You want to sell them all. Click down here, sell. Maybe you just want to sell one and keep one on the table just for, see how much you can get. Click confirm send. Now you sold one. Now you got one left. Okay, as you remember, we had 10. We sold 8. Now I just sold one. Now we got one left. Just securing your profits, guys. So now this is 60 bucks here. And let's just see what it's gonna do. It's gonna skip 10 minutes forward, see what's gonna happen. All right, this might look like it's gonna bounce. All right, yeah. So let's see if we can stop it real quick. Let's see if I can do a call real quick for an example. I got it paused. I'm just letting it catch up to the price right here. Okay. Broke the lows. I don't think it's gonna go any lower. Let me see if I can buy a call real quick. Okay, you know what? I'm just gonna sell this. So, all right, now the stock, it's gonna go up. You want out of this position. Click sell. Sell your last remaining one. Confirm send. Now you're out of the position completely. You made $3.99. That's a pretty good day. Another thing you want to keep in mind is whenever you're buying a lot of contracts and selling a couple of contracts, keep in mind how many you have. You don't want to be buying 20 contracts and then sell like 7, and keep the numbers round, right? Keep a round number. Don't be selling like 6 and then you got 14 left, and then you sell another 3, and then you think you sold them all, and then you still have more on the table, and now you're losing money. All right, be careful what you're doing. Make sure you know how many contracts you have total, how many you sold, how many have gone through. All right, always look down here. Make sure you have 0 once you're out of your position. Because in the past, I've thought I sold them all, and then I realized that I've had 3 left on the table, and then now I was losing money. So be careful when you do that. Nothing hard. Again, just make sure you sold all your position. You have 0 left at the end of the day or whatever. So now let's go to charts. All right, you know what? I think this looks really good right here. I think, this 265 level is good. It's a mid pivot point. Again, I'm not really too deep in the pivots, but the midpoint is up here. The mid pivot is up here. It might, I think if it breaks 265, it's going to start going up. I'm going to buy a call. I think the market's going to go up. Let's go buy a call. So come over here, trade. Now you're gonna buy the next one over, 264, okay? Because the price is at 263.90 or whatever. You're gonna buy the next one over. I think it's gonna go up right there. 10. I have it, 10. I like to do 10, and then we're gonna buy. Let's just hopefully I get filled here. Okay, I got filled. So I got filled at 221. Good price. And let's see what happens. All right, so let's go to charts. You're gonna be looking at your position. Now in real life, I wouldn't be trading like this. I mean, I would probably be doing 10 contracts, but I wouldn't just be taking trades like that, like real quick. Make sure you know what you're doing, because if you buy a call, now you think the stock is gonna go up, and it starts going lower and it starts breaking this low, you need to get out, because you're gonna be losing a lot of money. Like they tell you guys, it's easy to make a lot of money in options trading, but it's also easy a lot to lose. It's real easy to lose a lot of money as well, is what they don't tell you guys. So, all right, let's speed this up. Skip 10 minutes. Don't waste your guys' time. Okay, so look at this candle here. This is a good reverse candle here. If we can break this high, we're pretty much gonna go up. Do another 10 minutes here. Okay, now it's gonna go up. I bought contracts at 2. Oh, geez. I didn't realize they were far. So as you can see, I bought them at 264. So I was betting that the stock was going to go, remember it was down here. I was betting that it would go, it was going to go up. So I bought the next one over, which was 264 here. And now it's at 265.70. If we break this high, it's pretty much going to be a good day. So now we're up. All right, we got on betting that the stock was going to go up, and we bought this contract here, the 264 strike price, the 264 contract. So now we're really in the money already, because we got it down here, 264. If I believe correctly, I got in at 121. Okay. Now it's the further it goes up, the further it goes in the money, the more you're gonna be making. All right, so you got 265.50, and then 265. It got over 265. The next one's 267. So if this goes in the money, you're gonna be more and more in the money. So as of right now, I made $820 with these 10 contracts. So right there with what I got them at $1.21. So $1.21, about $1,200, $1,210 plus commission, another $3, whatever. You made $800. So that's how you make a lot of money in options, guys. So that's how you would be buying a call. Okay, that's how you'd be buying a call. Now you made money going upwards. Now what you can do is sell them. Say you want to sell your calls. You want to get out of this position, whatever. Go over here, just click on this button, and you're gonna have this order come up as well. It's gonna be sell like this again. 10 contracts, okay, whatever. Just if you want to sell 5, you put 5, -5, and then you just click confirm, send. Now you sold 5 at 309, and now you have. Okay, now you sold them all. Okay, let's check if I sold them all, come down to the position. Oh, I still have 5 left. All right, I need to sell those 5 now. Come on here, click sell, and sell 5. Okay, now I have 0. Now I sold them all. Now I made $1,300 on today. I'm good. You're all happy and stuff like that. So that's how you trade options, guys. That's how you day trade options, pretty much. Very simple, very basic. Like I told you guys, no need to make it complicated. No need to be buying $500 DVDs and stuff like that. It's just nonsense, guys. So that's how you do it. And like I said, what I showed you right now, you probably already got a good grasp. Just go ahead, go on demand, test this out, pretty much know what you're doing. Again, it's not going to be the same on demand. It's not going to be the same as live. Sometimes you won't be filled at the right spot. So it's just pretty much a test. So take the on demand kind of with a grain of salt, but that's pretty much how you do it. So if you're thinking about trading options, definitely get into it. It's not too hard. Even if you don't have to have a lot of money, if you have maybe about $3,000, you're good. $1,000, you're good. A lot of times I don't even take $1,000 position, and I still make pretty good money. So it's something to learn. Anything you can learn is always better. Another thing about options, it's T1. So if you say you have $1,000 and you waste all your $1,000 today, so you took $1,000 trade or $1,000 position trade, and you're on the cash account, don't be scared. Tomorrow, as soon as you wake up, you're gonna have your money right there again to trade with. All right, so if you have $5,000, and let's just say, I don't recommend you trade $5,000 a day every day, but let's just say you did one day, and then tomorrow you wake up, you have it already again, ready to trade. So very basic, very easy. You don't need a PDT account, margin account, nothing like that. So that's how you do it, guys. That's how you day trade options. Hopefully it taught you guys something. I'm trying to think of anything else I can tell you guys. That's pretty much it. I mean, anything else, you're gonna pretty much learn. I mean, if when you do trade options, though, you do need to know how to trade. Okay, you need to know the basics of this. Okay, so like right here, as you saw, I went short and then I went long. You do need to know that, though. You can't just be a brand new beginner trader and not have a clue what's gonna happen and just start buying calls and puts and stuff like that. You can't be, you can't do that. But I mean, if you're pretty much a consistently profitable trader, you pretty much know what you're doing, then you can come up here and start making money real quick. Honestly, just if you never traded before, if you have no strategy or anything like that, then don't jump in the contracts right away, okay? Because you're gonna be able to buy more than you can with shares, but you're gonna be losing a lot of money as well. But like I said, if you have a good strategy or whatever, you know what you're doing, you know when to buy, when to sell, when to go long, when to go short, then you can come over here to options and start trading options pretty much right away. If you guys have any questions or comments, concerns, let me know down below. And like I said, if you guys are interested in how to sell puts, stuff like that, I'll make a videos on that as well. Because like I said, as soon as someone hears that, they're gonna make another DVD on how to sell puts, and it's so easy. And if you guys seriously, if you guys need some help or anything like that, let me know in the comments. Try to respond to pretty much every comment I get. Sometimes I get a little busy, I'm not gonna lie. Like, as you guys notice, I don't like to make a lot of videos, because I'm not that guy that makes a video on every trade I do, but I try to help you guys out from time to time. So once again, if you guys have any questions, comments, or concerns, let me know down below. If you like the video, thumbs up. If you don't like it, thumbs down. And that's pretty much it. See you guys on the next one.